All right, guys, let's try one. A example for Treasury stock. This is PB5 at the end of your chapter for Chapter 14. So we have Pay Dirt Limestone Inc., organized several years ago and was authorized to issue 3 million shares of $40 par value, 9% preferred stock. It's also authorized to issue 3.75 shares of $2 par value common stock. In its 5th year, the corporation has the following transactions. On May 1st, it purchased its own shares of common stock. On April 10th, it reissued the shares of its common stock that it had in the company treasury. And then on June 12th, it reissued another 1,000 of the previous 2,000 purchase at $12 per share. Journalize the transactions. So obviously we will start with March 1st. We purchased, now whenever it's our own stock, we rename that to Treasury stock. Okay, so that's what we're getting. So we're going to debit Treasury stock. The normal balance for Treasury stock, again, is a debit. So this means that we're increasing this account, which we are, because now we have a larger amount of reacquired shares. And we reacquired it for $15 per share. The par value was 2. Now, in a previous video, I mentioned the method that we're going to use. There's 2 methods. There's the par value method or the cost method whenever we're accounting for treasury stock. We said in this class, we're always going to use the cost method. So we're not going to use that original par value. We're going to use the cost that we had to pay on the market. So $15 times 2,000, or a debit of 30,000. Oh goodness, I'm going to run out of room. We'll do that. Okay. So of course we had to pay cash to acquire this. We didn't get it for free. And the cash that we paid was the $15 per share. So credit of 30. And we'll put our explanation. It's not complete until we have our explanation. To record purchase of own shares at $15 per share. All right, that took care of that first date. Let's move on to April 10th. We said one of the positive attributes of treasury stock is once we have this stock back in the company's treasury, we can either retire it, we can give it to employees, or we can resell it. And so on April 10th, we've decided to resell it because the market price is higher than what we paid. So it seems like a good way to generate some cash. So we reissued it, so we got cash. How much cash? Cash is always the market price. So market price times the 1,000 shares. What did we sell? Treasury stock. So now we have to take away the treasury stock because that went out. Treasury stock. We sold 1,000 shares at. Now again, be careful here. You don't want to use the 18. We said that we're always using our original cost. We paid 15, and that's why I like to write it in the explanation so I can remember. 15. So we're going to reduce it for 15,000. We obviously have a difference here between our debits and credits. We know that debits and credits have to balance. So the difference goes to our additional paid in capital account for treasury stock. So this account tracks the excess of the market price over our cost with respect to this treasury stock. And now we're done with our journal entry once we put an explanation to record sale of treasury stock for more than original cost. Again, your explanation doesn't have to be exactly like mine, word for word. It just has to explain what's happening. So you might have just said to record sale of treasury stock. Perfect. You could have said to record sale of treasury stock at $18 per share. That's totally fine. Okay. All right, let's go on to June 12th. We decided to sell some more shares. So we're going to get cash. We sold the remaining 1,000 shares when the market price was $12. Not great because we bought it at 15, so this is a loss for us. And that would be 12 $1,000. What did we sell? Treasury stock. The remaining 1,000 shares. This is always going to be at your cost. 15. Oh, I should have left space there. 15,000. Debits and credits don't balance. We need $3,000 on the debit side. All right, thank goodness we have $3,000 in that APIC. So GAAP says we can use up that excess if ever we sell below our cost. And luckily there's enough in there. Thank goodness it just perfectly happens to match. If it didn't, if we exceeded the balance in APIC treasury stock, we have to take it out of retained earnings. We would take the difference out of retained earnings, which I showed in a previous video. But here, so easy that it just works out to be the exact balance we have in there. So we have enough to absorb this loss. So you're going to debit APIC treasury stock. Sorry, it's a little smushed there. I should have left more room. And let's put our explanation to record sale of treasury stock for less than original cost. Okay, hopefully you did good on that exercise.